Hey everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Lots to discuss today. We did have a market that initially was higher. It ultimately gave up those gains as worries continue over the health of the U.S. economy. Didn't help today that ADP private sector numbers came in lower than expected at 99,000. Those are private sector jobs added. Expectations were for over 140,000. Again, 99,000, a fair amount lower. Tomorrow, we get the non-farm payrolls report, right? So at 8:30 a.m. Eastern time, the non-farm payrolls expectations are for 165,000. I do think investors are now bracing for a potentially weak number following the JOLTS data, the ADP private sector data, and then obviously tomorrow we get the non-farm payrolls. All right, into the action we go here on this Thursday afternoon. We have the Dow Jones Industrial Average taking another hit today, down 222 points. The Nasdaq's eking out a very, very small gain today. Some of the mega caps are just inching up just a tiny bit. Over here on the heat map, you can see again, Apple up just under 1%, Nvidia up just under 1%. So that's helping keep the Nasdaq afloat. But, and there's always a but, right? Broadcom, one of the biggest semiconductor stocks, reports after the bell at 4:15 today. So we could see semiconductors down sharply after hours, or they could be up sharply based on that report. You might want to check that out. I won't be still on, but I'll be trading it with the Earning Trader guys live with members of the Earnings Trader. All right, S&P 500 down on the day, down about 20 points. Oil is flat on the day. Gold is trading up $18, and Bitcoin down a couple thousand to just below 60,000. Bitcoin, again, guys, we know that as long as it's below that pivot line, it's potentially vulnerable for a move to about 53,000. If it breaks 53, 49 would be your next pivot point. All right, couple charts that I just wanted to go over with you guys. We have to go over these. So first one's this one, right? This is, again, the yield curve. And the reason why I'm harping on the yield curve so much in the last day or so is because it has finally uninverted. And when it uninverts, what does that mean? Well, historically, and we can only go by history and the data, but historically, when it uninverts, here's your inversion, here's uninversion, right here is your recession, right? Here's the inversion in 06, 07, going into 08. Here's your uninversion, here's your recession. Right? Even during COVID, you briefly, or just before COVID, you had an inverted yield curve, and then it uninverted, and you had that really short recession during COVID. So the idea is here, now we are now just uninverting. It doesn't mean today, now a recession starts. Usually it's about a 3-month lag, but just be aware, this is something that historically we do want to follow. And again, listen, is it a guarantee that we're going to have a recession? No, there's no guarantees in trading or investing. But what it does do is when you follow the breadcrumbs, you can start to make educated assumptions, high probability trading setups, and that's what we're doing with this data. All right, last chart I want to show you before we get into stock charts is this one right here. This is, again, our total job openings JOLT data. And you can see, again, how if we flip over to that JOLTS data, we had so many job openings up here. It has now come down so sharply. We're now historically, listen, historically we're still elevated, right? Basically back to where we were prior to COVID. But it's the velocity of the drop that's concerning. This is why the Federal Reserve is talking possibly a 50 basis point rate cut in September. Now, most of us would say, yay, a 50 basis point rate cut, back to free money. Problem is, historically, again, if you look back at past recessions, past declines in the stock market, it's usually when the Fed starts cutting rates that the stock market begins to fall and fall sharply. So we just want to be aware. I mean, there's lots of narratives being spun out there for you guys on social media, in the mainstream media, but it's all about the data. If you follow the data, it's not always going to be right, but at least you have a higher chance or higher probability of being on the right side of the trade, which is what I've firmly dedicated myself to, is ignore emotion, ignore hype, go with the data, because that's my best shot of making money trading stocks. Okay. Speaking of trading stocks today, guys, what did we see? S&P 500, we can see it gyrating here just before the end of the day. In fact, we have 10 seconds until the close, and here we can see that we opened higher right up here. All right, we opened right up in this range. We then fell sharply. all right? And then we kind of chopped around into the end of the day. Number one, we chopped around sideways, and we're basically going to end slightly negative on the S&P, slightly positive on the NASDAQ. But the key is, again, it's people worried here going into that jobs number tomorrow, and honestly, partially Broadcom. Like if Broadcom comes out and says things are getting weaker in the AI chip sector, that is not going to be good for the overall market because the chip stocks have carried this market up. So again, these two things now, after hours today at 4:15 and then tomorrow at 8:30 in the morning, those are the ones that you want to pay attention to as a trader and investor. Now today, Tesla had another monstrous day, beautiful up day, trading up 5% on the day. This was after word was revealed that they will be debuting their robo-taxi in October. So all of a sudden, you're seeing buyers come in because they're excited about that robo-taxi. There's two levels to watch of resistance. One is this gap fill right here. So that's coming up right here, basically 240-ish, give or take. And then there's a downsloping multiple zone right up here. I don't think I would short this one as a swing trade. I would consider this one. If we rally all the way up into that, I would consider a swing trade short on it. Doesn't have anything to do with whether I like the company, don't like the company. Shut off those damn emotions, guys. Get rid of them. It does you no good. A swing trade, you just look for that little pullback, bank that money, you're done with it, then you don't care if it goes up or it goes down after. And again, that's the beauty of swing trading, which is what we specialize in here, plus day trading at verifiedinvesting.com. Nvidia closing just slightly positive on the day. Look at how quiet Nvidia was in the afternoon. You had the initial gap down right here, the big surge up, and then really, look at this. Look at how tight that channel is into the end of the day. That was essentially, this was the first hour to 2 hours of the day, and then boom, right into the end of the day, the rest of the day. Now, again, I still think this is probably because investors are still just kind of waiting on the sidelines to see what AVGO, Broadcom, reports in terms of earnings. All right, do I think eventually Nvidia is going lower? Yes, but doesn't mean it can't bounce $5 after being down $30 or $20 in recent days and weeks off of these latest earnings that they had and the Broadcom earnings that are coming after the bell. Speaking of Broadcom, we can see the daily chart on Broadcom right here. It's what we would call I would probably call this a megaphone pattern. It's just that it continues to expand. It's kind of the reverse of a wedge pattern. So you can see very clearly this trend line sloping up. And let me see, I might have this on logarithmic. I want to just check. No, it's regular, but I do have to adjust these trend lines. Bear with me as I do that, as I want my lines to be as accurate as possible. There's your upper line, and then here's your lower line. So there are your two levels, megaphone levels. So in terms of technical resistance, there's a little bit of a level connecting these highs. It's just below 170 there. Watch that in the after hours here. There might be a shortable day trade on that, but I wouldn't go short on it as a swing trade or a longer term investment. And then on the downside, you have this very clear level right down here, right? So this one goes all the way back to the beginning of that, and that's right around just below 140, 136. So if this dumped out to 136 today in the after hours, I actually probably will play that. And as I said, I'm going to be trading it live with the earnings trader guys here in just a little. Anytime it comes out at 4:15 or so, I'm able to finish it up here with trading the close, get over there, get to my desk, get situated, be ready to rock on these after hours trades. Last couple charts that we'll just quickly go over, guys, here. Let's look at Bitcoin. Bitcoin continues to be kind of in this just, weakish state, but that's, again, kind of what we expect, right? We did know that it's below the pivot line, so as long as it remains below the pivot line here, there's your pivot line, you favor that downside move. I cover this every day, and there's not much change here, so I'm not going to spend a lot of time on it and waste your time. All right, next up, gold. Let's see what gold did. Gold had a nice little update today, but is still stalled out right underneath this short-term high of 25.20. Tomorrow's jobs number will have a big impact on gold. I either think you're going to get a big breakout or you're going to get a bigger breakdown. Now, bigger breakdown, I mean, it would probably retrace back to like 2,400 as a max downside. It's not that big of a move, but just be aware, net long positions with institutions are very high right now. That always makes me nervous. It means that, again, the rug may need to be flushed out so some of these institutions get washed out. I know people think, wow, the institutions actually get washed out. But in reality, of all hedge funds, there's about 3% that are really good, and all the other hedge funds, honestly, mostly are not that good. So just keep that in mind, is that that's the nature of the beast. Silver today, last I checked, had a good bounce. Kind of came off of the recent highs a little bit here, but again, nonetheless, a decent bounce. Oil today was bouncing early and essentially gave it up. Not a good sign for the economy when oil can't even hold a bounce after dropping from 77 to essentially 67. Bounced early, and gave it all up. Lastly, natural gas. You got to be happy with the natural gas performance. Granted, it hasn't broken out yet, but nonetheless, look at this, guys. Nice day up on natural gas. Up, I think it's up about 3% or so today. But basically what we have is we have this trend line zone right here. We're into resistance. If it continues up, again, I'm looking at this 255 to 260 level as resistance for maybe a short. That's kind of my first level, this pivot low of the M pattern. Okay, so that would be resistance. If we push up into that, that would be the first time I would kind of start to contemplate a potential short on the chart. All right, guys, in terms of earnings after the bell, DocuSign is after the bell. I think that one just came out, but it's not really that big of a company anymore. And then obviously Broadcom at 4:15. All right, I'm going to get over there, get trading. Hopefully I'll see some of you guys in that room with us. You guys have a great rest of your day. Thank you so much for supporting Verified Investing. I'll talk to you soon. Take care.